Hello friend, welcome back. Today I have a very important video regarding how long the bull market will last and where is the bear market, because I suspect that it's just around the corner and you want to take profit. I will show you these charts backed by data on where the upcoming bear market will be. Because right now Bitcoin's at $56,000. It's wonderful, and people will be screaming when it hits 100K, and it's gonna be a lot of wild stuff. So let me first give you a lesson on history first. You see, back in 2017, when Bitcoin mooned from $3,000 to 19K, you can see here that it broke out at 7K, and it mooned for 21 days straight to 19,000, and it dumped down. You see, when it dumped down at this zone, people thought, oh, it's just dumping down. This is just a dip. And they bought it all the way up here, and it just dumped and dumped and dumped and dumped and dumped until like late last year. 2018, and it dumped some more. So I'm making this video because I don't want you to go through the same thing and hold for 3 years and suffer from PTSD. I don't want you to suffer the trauma. Okay, I want you to cash out at the top and enjoy your life. So learn from me. Okay, so I'll look at this chart right here and this chart right here, and I'll explain to you where is the bear market and is it around the corner. So if you look at this chart called blockchaincenter.net, you see the history of the price spanning years back since 2013, and you can see that it has been following this trend where there's a halvening, and then it spikes up. Because of the halvening, there's a decrease of supply. It breaks up and to these levels where it reaches like the bubble territory, and it just pops down. It reaches above to this bubble territory, and it just pops down over and over and over again. So looking at this chart, you can see that the blue line is the price of value where you should be accumulating, and the orange to red line is where you should be selling. You see, what's counterintuitive about trading is that people love buying high and selling low. I understand, because when you buy high, you feel this confident that it's going higher, and the news is making all these positive news about how companies are buying Bitcoin, how Bitcoin will change the world, and blah blah blah. So what I expect in this bull market is that if you look at these red and orange line, Bitcoin at 89, Bitcoin at $124,000, this top is where people mortgage their home and buy Bitcoin. This is where people take loan and buy Bitcoin. The reason being is because there will be a narrative where they say, oh, Bitcoin's 140K. It's going to go up to 500K. It's going up to 1 million. It's going to replace fiat. It's flipping gold. The news will go out with these narratives, how Bitcoin is the next best thing and there's a paradigm shift. That's when all the whales and Wall Street that have been accumulating since 20,000 or whatever, they will sell. They will dump it onto the FOMO retail buyers, and then Bitcoin will crash again, and it will crash low back to anywhere from 20K to 15K in the next cycle. So as you can see here, we are reaching the FOMO area and reaching the orange and red area where you should be buying. Probably should be selling. So 94K, 130K is the bubble territory. Here's the thing. If it goes up to 123, it could spike up. You see as here, it went to the red spot and it spiked beyond the red spot. So it could go up to 121, and it could spike up to 180, 200K per Bitcoin. But please, please be aware that this spike will be very fast. It spikes up fast and it will crash down really fast. This is what we call the hyperbolic blow off top, where everybody, including the shoe shine boy, starts buying Bitcoin, and this is where the whales, the Wall Street money, dump their coin on you, on the retail buyers, foam buyers. So let's look at the second chart. Okay, we're here. So here's another chart where there is a 2-year MA multiplier. Basically, this math this math equation that I won't go through. But if you look at the chart, you see that with this red line is a 2-year moving average. Yeah, 2-year moving average. Every time the price spikes above the red line, it goes down. It crashes. See here in 2011 and 2013, 2017. History doesn't necessarily repeat itself, but it does rhyme. So price spikes up and goes down. Above the red line, it goes down. So as you can see at present day, it's about to spike up above the 2-year moving average. So of course, just because it spikes up doesn't mean it will crash down immediately. It will spike up, overextend as the FOMO buyers come in, and then it will crash down for like a multi-year correction. Yeah. So it's possible. So what's the timeline? It's possible that the blow off top, like the end of the bull market, is around May to June. What's important is that you observe these two charts. This is called lookintobitcoin.com and blockchaincenter.net. Look into these charts and look at how the price spikes up and extends beyond the 2-year moving average, and look at when the price goes up into the bubble territory of the orange and red zone. And that's where you sell. That's where you sell and enjoy your money because you deserved it if you bought Bitcoin at 3K. Yeah. Okay, so now that I have done looking at the charts, let's go back and look at the current price action. Okay, so you can see that, I'm looking at the weekly chart, and notice how the price action is making a hockey puck, like a J curve up. And whenever the price makes a J curve, price action makes a J curve, we're in bubble territory. Of course, we still have more room to grow. I'm cashing out at around 100K plus. So when it hits 100K, I'll start taking off 10% of my stack, and then it goes up like 20K more. I'll take 10% off my stack, and I dollar cost average sell. Dollar cost average sell, so I get the best price. When you look at the price action, how the price, when it makes a J curve, like a hockey stick puck, it goes up too fast. Of course, people who bought at the bottom will take profit near the top. And look at the price action now. This time, it's a bit different because there's Wall Street money. Elon Musk bought $1.5 billion worth of Bitcoin. Wall Street is in, yada, yada, yada. So at this point in time, the bubble will be bigger. But fundamentally, market psychology does not change. It spikes up, there's a J curve, and then it pops and it dies off. Just look at the 2009 real estate crash. Look at the 1999 .com bubble. It's all the same. Okay, so let me see at the 1 month. Okay, so we look at 100K right here, 100K right here, and then we'll look at 200K right here. So what's going to happen? there will be a pullback at some point, or maybe it just blast straight up. But I think there will be a pullback on the weekly chart for sure. So if price goes like this, I'm not saying it will, but it goes like this, it's when you should start taking profit. Look into taking 10% profit off your stack. And if price action goes like this, then starts taking like 10%, 20% off your stack. Please notice that price usually during the hyperbolic blow off top, like in 2017, it spikes up really fast and goes down really fast. So if you're lucky to catch the top, then more power to you. Okay, friends, that's it for today. I have a Telegram channel where I can give you TA hidden gems on hidden gems for Binance Smart Chain coins and exit strategy and stuff like that. So if you find this video useful, please consider joining my Telegram group. It's a premium group and it's $30 per month. Okay, so thanks for watching, and I'll see you in the next video.